朋友，大家好，欢迎收看今天的新风视线。周二和周三，中国国家主席习近平3年来首次访问上海。在人们对中国经济的信心疲软之际，习近平访问中国的金融中心成为人们关注的焦点。习近平的陪同人员包括中国最高经济领导人、副总理何立峰，以及中央办公厅兼中央总书记办公室主任蔡奇。这使得这一次为期2天的访问更加具有象征意义。据央媒报道，习近平先后考察了上海期货交易所、上海科技创新成果展、闵行区城市建设者管理者之家，了解了上海增强国际金融中心竞争力、推进科技创新建设以及保障性租赁住房建设等情况。官方视频显示，周三，习近平来到上海一处政府保障性租赁住房小区，查看了保障性住房建设的进展，并且与当地居民进行聊天。在经历了房地产急剧下滑之后，中国近几个月再次加大了支持房地产行业的力度。央视发布的视频中，习近平还参观了一个仿真人机器人以及中国集成电路技术的展区，这是习近平一直在推动科技自给自足的一个领域。上海也是中国一些最大的科技公司的总部所在地，比如说中芯国际，还有人工智能公司商汤科技和拼多多的总部都在上海。习近平自2020年11月以来首次公开访问上海，而1年前的11月，上海发生了罕见的街头抗议活动，反对严格的新冠疫情限制措施。习近平此行被视为在中国疫情后复苏仍然举步维艰之际，中国决心要重振投资者信心的信号。上海也是中国最大的外商聚集地，特斯拉、迪士尼都在上海设有地址。今天，彭博社报道，迪士尼宣布将要扩建上海迪士尼乐园，在上海迪士尼乐园开设全球首个疯狂动物城主题游乐设施。这是继去年11月迪士尼在香港开业全球首个冰雪奇缘景点之后，在中国的第2次迅速扩建。面对一系列经济逆风，许多中国人放弃了昂贵的海外旅行，转而选择在国内度假，这使得国内的一些游乐园成为了受益者。习近平此次前往上海，也正值外国投资者对中国经济信心减弱之际。习近平在前不久与美国总统拜登会面后表示，要让外国投资者投资中国更加容易，要保护外商的合法权益。而在本周二，中国总理李强强调要加强与所有国家的供应链伙伴关系。彭博社报道，习近平最近正在将部分权力下放给李强，这令许多分析师感到惊讶，因为习近平掌权以来素以头衔之多而闻名，他领导着所有7个中央委员会。而上周媒体透露，中国总理李强正在监管今年3月份成立的中央金融委员会。彭博社分析师认为，打破先例任命李强是习近平给予中国2号人物更多回旋余地的最新例子。2000年代初期，李强曾担任习近平在浙江的高级助手，他的崛起与习近平的轨迹密切相关。李强对习近平的忠诚也正在得到回报。今年9月，李强成为首位代表中国出席20国集团领导人峰会的中国总理。习近平则因为与东道主印度存在地缘政治分歧而缺席了会议。在今年3月，习近平还派李强出席博鳌亚洲论坛，此前则是习近平亲自前往的。新加坡国立大学公共政策学院的副教授 Alfred Wu 分析认为，习近平决定分散工作量，表明他信任李强，并且想测试他作为中国2号人物的能力。吴教授还补充表示，授权是动态的，这取决于习近平的需要，因为他有时不想亲自参与到每一场的前线战斗。在习近平的前2届任期内，中国总理是李克强，他是一位经济学家，并且被认为与来自太子党的习近平属于共产党的敌对派系。此后，习近平开始了大规模的结构调整，将传统上由国务院总理监督的政策领域转移到他自己控制的共产党机关，包括成立中央深化改革委员会、国家安全委员会、中央财经委员会以及中央网信办等等。而今年3月，习近平继续沿着这条道路前进，成立了所谓的中央金融委员会， 负责监管中国的银行、保险和证券资产，而中央金融工作委员会是另外一个机构，负责管理金融部门的党建工作，以确保对党的忠诚。香港中文大学公共管理学教授詹慧敏认为，李强被任命领导其中的一个机构，这表明习近平给了总理更多的政策执行空间，尤其是在需要专业技术的经济问题上。但是这并不一定意味着李强就拥有最终决策权，但是至少可以简化执行过程。由于习近平现在是身兼数职，官员们在采取行动前往往需要等待最高领导人的指示。如果由习近平的亲信李强来领导该机构，则可以使得沟通更加的顺畅。此外，彭博社分析表示，中国今年国内的紧迫问题也可能加强了习近平下放权力的必要性。由于房地产长期低迷和劳动力市场疲软拖累了中国经济增长，中国经济在疫情结束后的恢复上是举步维艰。习近平还在秦刚上任外交部长数月后又突然将其清洗，这表明中国也存在着严重的人事问题。由于中国的国内事务是焦头烂额，习近平在2023年仅仅离开过中国3次，这是他上任以来除了疫情期间之外出国次数最少的一年。而在疫情之前，习近平的平均出访次数要超过美国总统，因此这可以说是一个十分明显的变化。同时，习近平今年即使是在海外，有时也不亲自发表演讲。今年8月，在南非举行的一次活动上，中国商务部长王文涛代为发表了为习近平撰写的演讲稿。而本月在加利福尼亚州举行的亚太经济合作组织论坛上，习近平只是向峰会发表了书面讲话。不过，分析人士表示，没有迹象表明零星的代理活动意味着习近平愿意放弃最终的控制权。即使是在经济事务中，习近平也确保他信任的李强并不拥有唯一的执行权。除了中央金融委员会之外，习近平特设的中央金融工作委员会则由国务院副总理何立峰担任主席。何立峰是另外一位曾经在福建省与习近平共事过的忠实拥护者。澳大利亚国立大学中国研究中心的政治学家宋文帝认为，习近平很可能有意让2个不同的人负责这些机构，以确保领导层之间的制衡。而实际上，由谁真正发号施令还不清楚。这种模糊性意味着习近平将会始终扮演调停者的角色，并且拥有最终决定权。而暂时拿到金融大旗的李强，周二在中国首届供应链博览会上招揽外资。李强说，中国反对保护主义，希望加强与所有国家的供应链伙伴关系。这是北京对白宫设立供应链韧性委员会后做出的最新反应。在中国首届国际供应链促进博览会开幕的前一天，美国总统拜登召集了新设立的白宫供应链韧性委员会会议，宣布了旨在加强美国供应链以降低美国家庭成本的新行动。担任这个新机构的负责人是白宫安全顾问沙利文和总统经济顾问布雷纳德。白宫表示，包括医药、半导体等关键供应链都要避免地缘政治风险。中国在过去几十年来已经成为世界工厂，美国和其他西方盟国对在供应链方面过分依赖中国一直在表达担忧，并且已经陆续推出一系列的去风险措施，包括出口管制等等。作为对白宫新设立的供应链委员会的回应，李强周二表示，历史和现实都证明，当世界供应链合作受到阻碍时，世界各国都将普遍受损。李强称，中国将为促进世界经济复苏做出更大的贡献。中国国际贸易促进委员会是本届供应链博览会的主办方，这是中国希望抓住外商投资的最新努力。中国曾经是外资的吸铁石，但是目前外商投资的增幅已经跌至历史新低。美国经济研究机构荣定集团的数据显示，美国与欧洲公布的对华绿色投资已经从2018年高峰时期的1200亿美元下滑至去年的200亿美元以下，只剩一个零头。而美欧对印度的投资在2021年至2022年之间则暴增了650亿美元，上涨了400%。尽管如此，汇丰银行本月早些时候的一项调查显示，还是有45%的企业预计未来1年还是会扩大在中国的供应链。在北京为期5天的供应链博览会上， 外企拒绝卷入地缘政治竞争。美国参展商占到境外参展商的20%，其中亚马逊、苹果、特斯拉和英特尔都参加了此次展会。苹果公司表示，中国对其供应链仍然是不可或缺。在苹果的200多家主要供应商中，有151家在中国设有生产基地。荣鼎集团的分析师表示，中国在全球价值链中的作用将会持续下去，因为一些跨国公司受到经济利益的驱动，仍然与中国合作。但是分析师也认为，跨国公司将会继续从中国转向多元化，这不仅仅是由于地缘政治的紧张局势，也是由于中国目前不断恶化的经济状况和政策环境。以上就是今天新风视线的全部内容，感谢您的收看。这里是华尔街电视，如果喜欢，记得点赞并且订阅我们的频道。我们下期节目再见。
大家好，欢迎关注华尔街电视频道。这期热点深度关注习近平这次前往上海考察，2天时间，他先后去了至少3个地方。这3个地方又代表着什么意义？又释放了什么信号？中国官方媒体报道，11月28日至29日，习近平在上海市考察调研。据人民日报消息，他先后考察上海期货交易所、上海科技创新成果展、闵行区新时代城市建设者管理者之家，了解上海增强国际金融中心竞争力，推进国际科技创新中心建设、保障性租赁住房建设等情况。路透社的报道提到，现场新闻照片显示，陪同习近平的包括负责中共日常事务的中共中央书记处书记蔡奇、国务院副总理何立峰、上海市委书记陈吉宁、市长龚正陪同考察。央视的报道影像也显示，习近平正在检查一个人形机器人以及展示中国集成电路技术的展览的一部分。他一直在推动这个行业更加现代化和自给自足。习近平还参观了上海闵行区的一个经济适用房小区。由于上海等主要城市的高房价将许多购房者拒之门外，中国政府近几个月承诺加大经济适用房支持力度。路透社的报道提到，这是他自2020年11月以来首次访问这座城市。1年前，上海爆发了针对中国零新冠政策的历史性街头抗议活动。此次访问也恰逢上海自由贸易区 FTZ 成立10周年。上海自由贸易区是经济改革的试验场，一直在努力兑现其最初承诺的货币自由流动和国际贸易便利化的承诺。上海是中国最大的外国商业社区的所在地，拥有特斯拉、迪士尼和欧莱雅等公司，但其经济和全球声誉受到了长达2个月的新冠肺炎疫情引发的封锁的严重打击。习近平此次访问之际，外国企业和私人投资者对中国经济的信心仍然低迷。路透社说，过去1年里，习近平的亲密密友、中国总理李强向外国公司和当地企业家宣布中国开放商业，但鉴于更广泛的反间谍法以及对咨询公司的突击搜查和缺乏提振信心的政策等，中国的许诺受到质疑。但新闻里习近平去的这3个地方又代表着什么意义？又释放什么信号？首先是上海期货交易所。习近平这次去上海期货交易所考察，从时间上看，是在中央金融工作会议召开后不到1个月。官方新闻评论认为，这是习近平对推动中国金融高质量发展、加快建设金融强国的高度重视与殷切期望。而对于习近平到上海期货市场，美国之音采访了前天泽经济研究所副所长蒋豪。蒋豪认为，习近平此行是希望稳定投资者，尤其是外国投资者的信心。 他告诉美国之音，期货在经济上发挥着很重要的标准作用，让各方能有效配置将来的资源，当中发挥很大作用。习近平是希望借此让大家看好中国的经济发展，给予大众对中国经济发展的信心。不过，蒋豪认为，无论是内需市场还是期货市场，都是自由经济的产物。自由经济是必须建立在公平和法治的基础上的，所以如果中国当局继续以人治代替法治，无法解决投资者动辄被控违规的问题，也很难让外国投资者会重拾在中国投资的信心。第二个地方，上海科技创新成果展。具体来说，这个展览位于上海张江科学城的未来公园。彭博社的报道提到，张江高科技园区为了迎接习近平，加强了安保措施。周二下午，通往专门聚集人工智能开发商和芯片设计公司的大型张江高科技园区的部分道路被封锁，人行横道处的警察封锁了该地区，禁止行人和车辆通行。此外，网络流传的一份通知显示，因举办重大活动，张江派出所要求所有职场窗帘必须保持下拉状态，除楼宇正门、车库门外，所有阳台、花园门将保持闭锁状态。根据官媒介绍，展览中包括 C919 大型客机、国产首艘大型邮轮爱达魔都号、中国空间站梦天实验舱、长征6号甲运载火箭、我国首台获准上市的国产质子治疗系统、世界首台2米 PET-CT 分子影像设备、通用人形机器人 G21 等等。央视的报道影像也显示，习近平正在检查一个人形机器人，这个应该是傅立叶智能的通用人形机器人 G21。稍晚，据信是傅立叶智能创始人顾杰 Alex 的朋友圈称，有幸和总书记汇报人形机器人进展，演示了傅立叶 G21 人形机器人各项功能。没想到总书记对机器人有很大的兴趣，每个细节都看得特别认真，关心应用场景，关心和新技术的突破，鼓励我们要建立产业生态，还幽默地说要给机器人起个名字，以后可以随时叫它。综合过去的新闻，习近平对于机器人可是非常上心的。中国制造2025政策开始实施前1年，习近平就已经在呼吁中国人进行机器人革命。他说，机器人将成为制造业的皇冠宝石。官员于2017年设定的目标是，国产工业用机器人的占比将从目前的1/4于2025年提升到70%。2015年，习近平在致2015世界机器人大会贺信中还提到，随着信息化、工业化不断融合，以机器人科技为代表的智能产业蓬勃兴起，成为现时代科技创新的一个重要标志。2017年《纽约时报》的文章，习近平搞机器人革命，美国能跟上吗？就提到，根据行业贸易组织国际机器人联合会 International Federation of Robotics 的数字，中国在2013年已成为世界上最大的工业机器人市场。如今，中国正朝着另一个大目标努力，成为用于工业、农业和一系列其他应用的机器人的最大生产商。机器人行业的专家说，这个目标可能还需要10年的时间，但他们几乎看不到能阻碍中国获得最终主导地位的东西。多年来，中国的主要卖点是廉价劳动力，但在过去几十年里，中国的人口变老了，也变得更富裕了。中国工人的工资增长速度高于中国经济增长速度。中国领导人担心制造商会被高工资赶走，就像美国制造商的活儿被中国拿走那样，中国制造商的活儿将被印度、 越南和其他亚洲的发展中经济体拿走。所以中国人干了中国人做的事儿，他们在中央层面计划了一个复兴。在接连几个5年经济计划中，政府推出了一系列的制造行业改革，其中新思想之一就是自动化。地方政府为企业购买和制造机器人提供了数十亿的补贴。政府一直特别感兴趣的是可以用于中国汽车厂的机器人，人们一直批评中国汽车厂的制造质量。用机器人来制造汽车，不仅能节省人工成本，政府还认为他们能制造出更好的汽车来。看到傅立叶智能的通用人形机器人 G21， 习近平显得颇有兴致，还要给机器人起名字。不知道他会不会觉得离自己所憧憬的机器人革命又近了一步。在2017年的《纽约时报》的文章中曾提到，像其他中央设计的方案一样，中国机器人计划的实施并非没有遇到麻烦。它出现了过度投资和浪费的问题，而且许多中国机器人企业并没有制造出非常好的机器人。习近平2天访3地，还去了闵行区新时代城市建设者管理者之家，这其实是一个保障性租赁住房社区。官方媒体新华社的评论认为，上海保障性租赁住房建设为满足新市民和青年人的住房需求，打造了一张床、一间房、一套房多层次住房供应体系，传递出城市建设以人民为中心的鲜明信号。2019年11月，总书记在上海市杨浦区考察时指出，无论是城市规划还是城市建设，无论是新城区建设还是老城区改造，都要坚持以人民为中心，聚焦人民群众的需求。2020年出席浦东开发开放30周年庆祝大会时，总书记再次强调，城市建设必须把让人民宜居安居放在首位，把最好的资源留给人民。习近平访问这3个地方，相信分别代表着他对于金融、科技以及民生这3个方面的看重，信号是放出来了，但能有多大振奋作用，还要静待观察。好了，以上就是今天热点深度所有内容，更多资讯可以关注六度简报网站，网址是6dobrief.com，在上面各位可以订阅各类符合您喜好的简报新闻，有免费套餐，也有更加专业的付费套餐供大家选择。今天的视频就到这里，我们下个视频再见。
I moved to China, to Shanghai, in 2007, and I left China 11 years later in 2018. In that period, and in the time since, a huge amount has changed in China and in the global perception of China. In 2007, China's population was still relatively young, and its workforce was growing. Real estate was booming, and trade and technology ties with the United States were vibrant. Tensions in the Taiwan Strait, well, they didn't go away, but they weren't top of anyone's worry list. Fast forward to 2023, and the situation has significantly changed. There are certainly some big positives. China continues to innovate on sustainable energy, on electric vehicles. Xi Jinping has cracked down on corruption, and the Belt and Road Initiative has put Chinese capital and expertise to work around the world, driving economic development. But on those big macro factors, things have changed, unfortunately, for the worse. China's working age population is shrinking. China's real estate sector is in a significant correction. There are new and significant barriers to trade and technology transfer between China and the United States. And tensions in the Taiwan Strait, well, they've seldom been higher. Put the pieces together, And it's really no surprise that China's growth, which in 2007 was comfortably in the double digits, will in 2023 come in at around half that. 5% growth, not bad in international comparison, but pretty lackluster compared to China's recent history. So, time for a re-evaluation of the China story. And who better to help us with that re-evaluation than our fabulous panel? Fred, let me start with you. China's property sector, once the biggest driver of growth, is now in the middle of a serious correction. How far does that correction still have to go, and what are the costs going to be for China's economy?
Right, Tom, I think your opening remarks are really a very pessimistic case, about China. But I think you're right, at least on property. Okay, property saga in China is still unfolding. Home prices in major Chinese cities have been falling. Many of the country's biggest property developers are teetering on the brink of debt defaults, falling sales, liquidity crunch, and under tremendous pressure to restructure and repair their battered balance sheets. So the property, definitely I don't see the end anytime soon. I think the, what's happening in China is quite different from what happened in the US during the subprime housing crisis in 2007-2008. That was, if you recall, was pretty abrupt, full-blown and violent implosion, with the global financial crisis. What's happening in Chinese real estate, I think it's a multi-year process. Okay, it's more like in Japan, the real estate crisis in Japan in the 1990s, be the slow motion crisis. So, China will have to deal with this problem, for at least a few more years to come.
Thanks very much, Fred. When you started by saying, Tom, your opening remarks on China, I was hoping the next words were going to be, were extremely insightful and completely correct. So I was a little disappointed to hear I was off base, but thank you for your insights. Ben, we've heard Fred touch on the risk of a pass-through from property correction to financial crisis. And Fred touched on the examples of the Lehman shock following the subprime crisis in the US, and of course, Japan's lost decade in the 1990s. You're managing trillions of yuan of investments in the Chinese system. How are you thinking about those risks? Should we be worried about property crisis sagging into financial crisis, or are those fears overblown?
Fred just mentioned about global financial crisis. I was AIG's regional risk manager for Pan-Asian businesses back in 2008. I still remember that day I was worried about my job next day. And coincidentally, you just mentioned something very interesting. I moved from New York to Hong Kong in 2007 when you moved to Beijing. I started working for mainland China company in 2018, and you just moved out of China. It was such an interesting coincidence. What I'm thinking is the property market in China needs a correction because there was a bubble. There was heated momentum in China. And, but from the investor's perspective, I run large portfolios. My total portfolio under my management is like 4.6 trillion RMB. That's really, really large. And what I need to do is to stay stable with my allocation strategies and run through the jugular cycle. Look, every economy has a cycle and run through different cycles. And we are just in the cycle of a lower phase of that cycle. We were at the peak and coming down to the lower part of the cycle, and it's going to come out of that one. How fast will China's property market come out of the trough? Different parts of the property will behave differently. You got old traditional residential housing. It could have a long trough, could have a long period of being cold, but also we have multifamilies. We have rental properties that are really trendy today. We're investing more into those kind of properties. And also the quasi-real estate, we got infrastructure, we got the logistics and the industrial parks. All these things are also real estate type of investments that we are really interested in. And coming back to your question about how China will be compared to Japan, I did some really in-depth studies before just to make sure, compare the two countries. There are a lot of similarities, of course, but I think there are some key differences. China has a bigger economy and a more diversity in terms of the composition of the economy, of the macroeconomic structure, and the depth. And also, there's one more thing, that the policy, execution of policies in China is quite efficient and effective. So, I want to quote the governor of CSRC, Mr. Yi. What he said before was that, in one of the conferences, he said the policies will come out gradually. So I think the government will take a very measured approach, not to flood the market with all kinds of policies that people don't have a direction with, and will test the water and make sure things don't go overly corrected, and eventually the sentiment will turn. So I think it's a measured policy action with careful investigation on the surroundings and with very solid execution. So within a few years' time, I think I'm positive it's going to come out of for better. Thank you.
Gary, property is part of China's old economy. You're an investor in China's new economy. Where do you see the innovations? Where do you see the opportunities? Where are you putting your money to work?
Yeah, I think if I drew one comparison to Japan, since we brought up Japan, Japan really had no innovation society. China has been entrepreneurial driven now for the last 20 years. When you look at the economic development, virtually all the new growth has been in private companies. The profit growth has been in private companies. Entrepreneurs have driven virtually all the innovations. They're not coming from the SOEs. And so there was a great deal of money that came in. Foreign money initially funded a good part of the innovation that occurred in China. That's now being transitioned to RMB. So 90% of venture capital today in China is RMB. When you look at 3 of the last 5 years, the Chinese stock market generated more exits in both dollars and number of deals than the US stock markets, which is not something people would have expected 20 years ago. So the innovation economy in China is actually quite robust. And it's very broad. It's affecting the healthcare system. It's going to occur in semiconductors, partly because of U.S. policy and partly because of just the native skills that are there. There are areas that are more challenging, enterprise software and things, but advanced manufacturing, AI, biotech, drug development, cell therapies, gene therapies, these are all areas that are going to be very, very robust in terms of venture capital investment going forward. The other piece I would add, just very briefly, is that dollars going into China have declined, but they've declined globally. In 2005, the US and China together combined for about 84% of global venture capital. Today, they combine for 83% of global venture capital. And it's quite staggering when you think about the amount of money that's gone into private equity and venture capital, that 2 countries still control that. The only 2 countries in the world that are complete ecosystems, from sourcing capital, funding entrepreneurs, growing companies, exiting, are China and the United States. That's not going to change anytime in the near future.
Jenny, China's rise as a technological power is clearly a huge positive for the people of China, helping raise standards of living for 1.3 billion people. How does it look from the US perspective? We see the Biden administration moving to constrain China's access to leading-edge semiconductors, for example. I think many people in Beijing view that as going beyond national security and actually as an attempt to contain China's rise as a technological power. You recently joined Bloomberg from the White House, where you worked on China policy. How should we think about it?
No, I think that's right. We're watching a major shift in how the U.S. approaches technology and China, and I think it reflects a shift in how the U.S. looks at China, but also its own economy. So for decades, the U.S. has had policies in place that restrict China's access to tech that is primarily used for military applications. But recently, we've seen Washington become more concerned about the role of technology leadership and the impact it can have on industrial capacity and on the workforce. And that's really become a consensus across both political parties. And they've shifted away from kind of the traditional neoliberal approach to technology and economics and trade. You add to that the lines in technology itself are becoming more blurred. There's tech like advanced semiconductors that has military applications, but also important commercial applications. And then additionally, you have the blurring of the lines in terms of who is developing and using that tech with civil-military fusion. And you combine all those factors together, and what we're seeing is a real expansion in U.S. policy away from the really narrow target on military end users and military applications to things like the CHIPS restrictions, which are targeting tech that is used commercially, it's used by commercial end users. I think because those underlying concerns and those underlying structural factors are persistent, and this is a policy that began in the Trump administration but has continued under the Biden administration, very strongly supported in Congress, and China's continuing to make progress despite those restrictions, I think Washington's going to continue this approach, and that metaphorical fence is going to continue to go up. The metaphorical yard is likely also going to expand.
Gary, your perspective on that. Is the fence the right height or too high? Is the yard too big or too small?
So I think the fantasy of industrial policy should have been laid to rest a long time ago. Japan had an industrial policy. Didn't work out so well. China's industrial policy, I also think, hasn't been terribly effective. They announced a major consolidation of the steel industry in 2002, and they went from 54 steel companies to 52 steel companies in 17 years. So, industrial policy is simply not the way to go. The U.S. now has to go through the process of understanding that and how much money that'll waste and the inefficiencies associated with that. So we are unabashed supporters of entrepreneurs. We're unabashed supporters that the private sector at the point of the spear is where the changes are going to occur and where the innovations are going to be developed. The government can backfill and support from behind, not picking the winners as companies, but picking sectors that are strategic. And China has selectively done that, I think, quite well. I think that the U.S., when you look at the CHIPS Act, they loaded it up with so many things that no one wants to take the money. 15 months later, not a single dollar of the CHIPS Act has been deployed because the companies don't want the money because of all the bells and whistles that the government associated with it. So industrial policy is not going to be the path to success for the United States. It hasn't been the path for success to China.
Jenny, let me come back to you, and we'll stick with the subject of US-China relations. Now, there's a mystery as to why President Xi and President Biden decided to meet in APEC when there's a perfectly good international summit taking place in Singapore right now. But there we are. Xi and Biden meeting in APEC. What do you think is going to be on the agenda? How are your former colleagues on the National Security Council going to be briefing President Biden ahead of that meeting?
I think there's a lot on the agenda. This is the first time they will have met since this time last year at the G20. And there's a lot that's happened in the world since then. So I think they'll be talking about global events, the ongoing war in Ukraine, now the war in the Middle East, where both sides really have a major stake in not seeing that conflict boil over. Taiwan, I think, is going to be on the agenda, particularly with the upcoming presidential election. This is something that both sides are watching closely. They're watching what the other side is doing on it as well. And then I think a huge portion of the conversation will be about the bilateral relationship. Since they last met, both sides have taken steps that the other one doesn't appreciate, the CHIPS restrictions being certainly one of them from Beijing's perspective. So I think there's going to be the traditional exchange of complaints on that front. But I think the most forward-looking part of the conversation is going to be how are they managing those tensions, because they're not going to go away. And in that respect, I have pretty low expectations for major deliverables. I just think we're past that paradigm at this point in time. But we could see them look towards other mechanisms for managing that relationship, managing the competition, new working groups and dialogue mechanisms, which don't sound very exciting, but are actually pretty important for stabilizing the relationship.
Fred, your perspective on that upcoming Xi-Biden meeting and the broader US-China relationship. How do you see that evolving in the years ahead?
Well, what's really troubling is the last couple of years, there's been a shouting match across Pacific, right? So now the leaders actually are engaged. They're talking the meeting and the ministerial meetings. Yes, we still have a lot of differences, but we also find ways to work together as necessary. So I'm hopeful the summit will really dial down, the tensions by several notches, and then, both sides become more pragmatic, focused on the areas. Of course, they'll have differences, but also areas that there are shared interest and, shared challenges like climate. So I'm definitely hopeful and encouraged by the willingness of both sides, to engage. Just, that's a good sign.
Certainly the flurry of visitors from DC to Beijing, Yellen, Blinken, Raimondo, of course, Vice President Han Zheng's speech today at the forum, and now the upcoming meeting between Xi and Biden.
And Mr. Bloomberg.
And Mr. Bloomberg, of course, do signal. I should be the person congratulating Mr. Bloomberg.
That's right.
So do signal that there is an attempt to put a floor under the relationship and to bring some stability. So a hopeful sign. Ben, let's bring the conversation back to China. We've talked about the slump in the property sector. The property sector, of course, is a big chunk of the economy. And we've seen Beijing move stimulus into place to try and offset the drag from property. We've seen rate cuts from the PBOC, fiscal stimulus. Is it enough, or do you think more is required to stabilize China's growth this year and next?
I think the policies are coming out gradually, and I think there will be more policies coming out. And looking at the interest rate level in China, it's lowered, but it's not low enough. That's my personal opinion from a macroeconomist or investor's perspective. I think China still have way to, on the monetary side and also fiscal side, more tools in the box. And, just going back to, I did want to comment on your previous question about US-China relationship. I think as investors, we have been waiting for that meeting for a long time. I think it's happening eventually. Great news. And it's a bullish signal for the equity market. And so I think if we look at the US rate cycles and European rate cycles, Japan rate cycles, lower rates will follow the higher rates, and eventually it's going to come up. So China is going into a lower cycle of the rates, which will be bullish for equities and the real estate sectors. So we're just for large money investors like us, we have a balanced portfolio. We want to sort of touching the water and to see which part is going to come low and which part is going to go higher. We pre-allocated money to rates, which was the very right call, and now the rates are coming lower. We are allocating more into the risk assets, which we feel is going to have a better performance next year.
Fred, we heard a little bit on China stimulus from Ben. I'd be interested in your perspective, both on the short-term and the long-term priorities for China's economic policy. Short-term, what more do you think China needs to do to stabilize growth into 2024? Is it more from the PBOC, more on fiscal policy, both? And thinking further out, what are the structural reforms that need to move into place so that China can prove the pessimists wrong and sustain growth at a steady pace into the 2030s?
Yes, the answer is all above. There's still vast scope for policy actions. Ben mentioned the real interest rate in China is still too high, given just how subdued the inflation is. And on the fiscal front, other than sub-national governments like municipal governments, but the national government still has a very strong fiscal position. So clearly a lot more can be done. But to me, the biggest upside is not from conventional cyclical policies, rather from far-reaching structural reforms. You know, China has been successful thus far, mainly because China has been pushing forward market reforms. And those reforms have really unleashed China's potential, particularly really rekindle the entrepreneurial class I think Gary talked about. But right now, Chinese entrepreneurs you know, are lying low and or lying flat. Sentiments are very weak, you know, because people are not certain whether the leadership is committed to the kind of reforms. You know, China has benefited so much for so long, and China will continue to need, you know, to the next level from a high middle-income country to a high-income country, you know, fully developed, as President Xi in the vision envisions. So, you know, that's what I will watch very closely, and in particular, you know, really, I would say, among all the broad range of reforms China need, the single biggest priority in my mind is legal reform, is to really establish true rule of law that's essential for the healthy functioning of modern market economy, which China is. You know, protection of property rights, protection of entrepreneurs from arbitrary political interference, and worse, even persecution. You know, this sense of insecurity, in my, you know, my observation in the Chinese entrepreneurial community, you know, is really I've never seen this since 1978. So, if the moment that China really commits to rule of law and you know, market reform, I do think the confidence will, you know, slowly but surely come back. Then the animal spirits will be rekindled. Then I'm quite optimistic, not only about the short-term outlook, which is 2024, which I think Tom, you want to ask about. I think, you know, China should be not really stretched to reach 5%, you know, in 2024, but more importantly, over medium term, next 5 years to say to 2020, 2030, you know, China should be able to achieve high quality, but also fairly high rate of growth, which is, I would say, 5%, just to China's per capita income. So China still, yes, short-term uncertainty aside, I think the pessimism right now, I think is a bit overblown. China still has huge policy space to maneuver, and China has tremendous underlying potential, particularly the entrepreneurial energy that's still very much there.
Many people make the comparison between China and Japan, and Ben mentioned some of the reasons at the beginning of the discussion why perhaps those comparisons don't really work, and we should be more optimistic about China than the Japan comparison suggests. I think another powerful argument in that direction is thinking about what level of development Japan achieved before their growth significantly slowed. Japan's GDP in 1989 was about 80% of the level in the United States. Japan was already a rich country which had used up its development space. China's GDP today, well, it's grown really quickly, but GDP per capita is still a fraction of the US level, and that points to huge amount of potential in the years ahead. Gary, we heard you talk about the way in which entrepreneurs have driven China's growth, right? From entry into WTO and the rise of the East Coast export factories to the e-commerce giants like Alibaba and Tencent. Of course, the entrepreneurs have been a significant driver of China's development. But we heard Fred say, well, perhaps the environment for entrepreneurs has changed, and it's become a lot more challenging. What's your perspective on this? Has the Xi Jinping Common Prosperity Agenda really changed the story here? And if it has, what has China got to do to revive those animal spirits?
Well, I would say the Xi Jinping Common Prosperity has no hope of being achieved without the entrepreneurs in China. I mean, the one is not going to be able to exist without the other. I think you have an allocation issue, and allocations flow over time. In China right now, when you have over 70% of the consumer savings are in property, number one, that was a mistake to ever allow happen, and it's totally unsustainable going forward. Why does that happen? Well, it's because you have capital markets and a stock market that have basically been flatlined for the last 15 years. You put $1 in 2009 in the Chinese stock market, you have $1 today. Maybe you have $1.02, maybe you have 98 cents. And part of that is simply trust. And we're going to hear a lot more about that word, because when you do reform, you have to make sure that the reform is actually establishing trust. If the Chinese consumers don't feel comfortable, those hands get jammed in the pocket so deep, no force on earth is going to get them to spend money. Because historically, as families, pick whatever scenario you want to use, Cultural Revolution, et cetera, they simply won't spend. So the government policies of trying to increase consumption will not work unless they establish trust. The asset allocation that needs to occur in China is people willing to put money in the stock market from the property market, having the capital market be another sustainable long-term store of value. That is not seen that way today. And they've done precious little in the last 5 or 6 years to actually encourage people to do that. So entrepreneurs are fulfilling their job. I would say there aren't as many startups today, but what the problems they're trying to solve with technology, the depth of the technology innovation is very, very high. And the number of entrepreneurs is still enough. Again, 80-something%, China's 40% now of the global venture capital ecosystem. That's enough money, there's enough people, there's enough market demand. But they also need to establish a more sustainable capital market structure so that people don't think there's just one place to save money in China. And right now, that's the property market.
What would be one powerful signal that Beijing could send that they want to move in that direction?
I think, Fred probably knows the capital market structure better than I do in China. I would say that these market interventions that they do, where the government starts going in and buying stock, I think it's a mistake. I think the lack of quality analysis by most of the investment banks in China compared to their foreign counterparts is a problem. Allowing that market to open up so that the best bankers in the world could actually get in and establish a presence in China and support the capital market, I think would be good. So more competition in the financial services market from global players is something that was promised as part of WTO, but it really has not yet materialized.
Fred, do you want to come in on the capital market story? What's the unfinished business for Pan Gongsheng at the PBOC?
So China today is the second largest capital market in the world after the US. Both equity capital market and the bond capital market is all, north of 20 trillion. But unlike the US, there's not enough depth, not enough liquidity, not enough transparency. And also I would say there's not enough critical mass of institutional investors, right? So most of the national savings, as Gary noted, is really scattered, by individuals and the mattresses or speculative into property and the like. So, to really unleash long-term contractual savings, insurance is a long-term insurance policy, but also pension. I'm sure earlier people talked about like demographic. Maybe not that some people draw the parallel between China and Japan. Demographic trend so starkly similar. But China actually has the opportunity to respond to that, by leveraging the national savings rate, more long-term saving for old age and pension. And with that, then, Gary's, can not just rely on sophisticated US investors, pension funds. They can actually raise money easily within China from Chinese pension funds and insurance companies. Because given the sheer size and the diversity and the opportunity set in China, it's not realistic to rely on international capital and confidence alone. You need to have enough domestic capital mobilized, for long-term investments. That will be a virtuous cycle, and I think there's opportunity there.
Jenny, we've talked a lot about risk on this panel. We've talked about risks in the property sector. We've talked about risks in the financial sector. But I think for many people in the world, looking in they see one even bigger risk, the risk of a crisis in the Taiwan Straits. You ran Taiwan policy on the National Security Council. How should we be thinking about this? How big is the risk of a misstep triggering a crisis? And if one does occur, what's the impact on the global economy?
I think in many ways, the situation in the Strait is at its most dangerous point in at least the last 20 years, maybe even more dangerous than that. If we imagine this as three sides to a triangle, each side of the triangle is kind of moving away from the other. So you have in Taiwan increasing affiliation with a different sense of what Taiwan is and Taiwan's democratization, and an increasing sense that Beijing more recently has been less friendly and more of a foe towards Taiwan. In Beijing, you have increasing sense of concern about Taiwan's trajectory, and also an affirmation that Chinese leaders don't want to hand this issue off to the next generation, as they've said quite clearly. And then in Washington, as we've already been discussing, there's that growing tension with China and growing distrust of China, and in particular, a concern about developments in the Strait, because that could be a major point of crisis, not just between Taiwan and China, but also between the US and China. If a crisis were to break out, I think it's really difficult to understate the risks for the global economy. If we take a look at just one side of that triangle, at Taiwan, and just one thing that Taiwan makes, granted, a very important thing that they make a lot of, which is semiconductors, the number of sectors that rely on Taiwan's both cutting edge and more mature nodes, it's everything from smartphones to PCs, home electronics, and autos. Already you have a huge portion of global output and a lot of services that rely on those products. If Taiwan's supply of chips were to be impacted in any way, and in particular if it were to go offline, I think the implications for the global economy would be huge.
So I think we find some reasons for cautious optimism about China's medium to long-term growth prospects on the panel today. I also feel that for myself, any discussion of China's economy right now is a little bit tinged with sadness, as we remember Premier Li Keqiang, a man who gave so much to the cause of China's development and left the world far too soon. Now, those who met Premier Li talk of a man of fierce intelligence, of deep commitment to China's development, and someone who was always eager to absorb new perspectives, new ideas, advice on China's development trajectory. So as we wrap up today's panel, I'd like to come to each of you with the same final question. What one piece of advice would you like to give to Beijing, or to Washington, D.C. as it thinks about its China policy, or to businesses and investors as they attempt to navigate the complexity of the Chinese economy today? Ben.
I have two short stories to share. One is back in 1806, East Indian Company set up their East Indian Company College near London, recommending to the government, the UK government, the British government, to set up the civil service system based on the national examination system they want to learn from China. It was Qing Dynasty. It was before the Opium War. So that exchange of ideas and the exchange of culture happened during the most unimaginable time. And the second question is, the second story is John Murray Forbes, who was part of the Forbes family in Boston. He first started his career in Guangzhou in 1834, I believe. Then he returned to Boston in 1850. Bringing back the money he made in China, and also $500,000 given to him by his mentor, the Chinese mentor, Hoka. The money was invested in Chicago railroads. And the railroad system went beyond Mississippi and afterwards. And John Murray Forbes became the chairman of National Committee of the Republican Party in the US. And that was right around the Opium War period. So what I'm saying is, people have to go back to history and learn from history. We will, once we study history, we know the interactions, the collaborations, the investments never stopped. Even at the time we don't even remember, we don't even imagine that things would happen that way during that time. So my last advice to the people is stay connected, stay invested, or you will regret it.
Gary.
So the advice would be don't try for the grand bargain. I don't think you're going to have a very, very broad-based agreement on hundreds of points. Right before this session, there was a very, very important initiative that has been sponsored by Bloomberg, Asia Society, Chinese counterparts, McKinsey, and so on, Bayer. And it's on cancer. And it's the largest cause of death in China. It's the second largest cause of death in the United States. And it's an initiative to normalize guidelines around data and being able to actually solve this, not for the US and China, but actually bring that to the rest of the developing world. Find things like that where the two governments can actually say this is a win. And if after 5 or 10 years you have 8 or 10 of those, that'll become the norm for the conversation instead of all the things that aren't working in the relationship.
Jenny.
I think as someone who's worked now across both these communities, the U.S. policy world and now the private sector, I've been firsthand witness to the gulf between the two and the lack of communication that often happens. And my advice would be to the business community, as we've been discussing all day today, geopolitics is back. Whether or not we like it, it's here. And I think it benefits all of us to try and understand and get inside policymakers' heads of how they're looking at the world, because inevitably steps they take are going to influence economics. And then for my former policy colleagues, I would just reinforce the importance of talking to the business community. They aren't just stakeholders in major issues like the U.S.-China relationship, but they're also actors with their own agency, their own role to play in that relationship, and they have a lot of unique and important insights to bring, in particular on the economic implications of policy steps.
Fred, the last word to you.
Well, for politicians, diplomats, and the security experts, I would say, it's not everything's a zero-sum game, right? So always keep it in mind. Then second, for business and investors, definitely, despite all the short-term uncertainty challenges, like any other large complex economy, China has its share of difficulties and challenges. But China also has enormous resources, capacity to deal with the challenges and still untapped long-term growth potential. So the advice is very simple. Invest in China.
Keep talking. Deliver small wins even if you can't deliver big wins. Stay invested in China's long-term potential. Wise words from our panel. Benjamin Deng, Fred Hu, Gary Reichel, Jennifer Welsh, thank you very much.